Hello, you're watching ET Markets Live. I'm Neha Vashisht. Welcome to a brand new episode of ET Market Wrap. Today I'm here with Mr. Kranti Batini from Wealth Mills Securities. Thank you so much, Mr. Kranti, for taking our time and joining us today on ET Markets live stream.
Thank you, Neha. Thanks for your invitation to share my market views with you and with all the viewers of ET Markets. Thank you. And season
Well, the
greetings to you and to all the viewers.
Thank you so much. The pleasure is mine. So let's quickly start with our ET market wrap. Today, as we can see, as of now, the markets are little flattish to bearish right now. Not too bearish, but still on the downside only. So, what do you think is the dominant driver of the markets right now and in the coming week? What could we expect?
The dominant driver, Neha, in these markets is the domestic liquidity. It's so strong at this point of time. And what we witnessed is last week, earlier, the foreign portfolio
Hmm.
investors have been the net sellers. They have completely reduced their short positions at this point of time. That was the reason we witnessed some kind of a short covering rally. And here and there, they have been buying on Indian markets. So by and large, the FPI selling has came down drastically. So the key driver for
Hmm.
this market at this point of time, one is the uh, domestic liquidity, and also some kind of anticipation with respect to the news from U.S. administration and Indian administration that can be a deal of trade deal between India and U.S. So that can be a positive trigger. That's what keeping the market at a higher note in the medium to
Hmm.
short term. But we need to wait and watch how things are going to unfold in the next couple of weeks. But by and large, the domestic liquidity is so strong that has been holding the market at this point of time. In fact, market was just at a kissing distance from the previous high, but it could not able to hold on in the range of 26,000. We could able to
Hmm.
see some kind of a profit booking in this range in the last couple of days.
Right. So let's also dig a little deeper when it comes to the risks. You mentioned a lot of risks, like we have inflation surprises, we have interest rate shock, and then geopolitical issues, earning misses, liquidity surprise. So, what do you think from your view, which could be the highest risk in the near term? Not talking about the specific next week, but just the next 3 to 4 months. What could be the highest risk right now in the markets and why?
The risk is the geopolitical uncertainty, definitely. In domestic market, we have been doing well. We had a cool off of complete inflation, okay, which is quite
Hmm.
favorable. So the right now, the policy making of US and how this the entire episode of trade tariff is going to create some friction on the market. The worry for the market at this point of time is, despite of entering the trade deals, look at the friction between US and Japan, US and Korea, and US and China. So despite of the trade negotiations, but still these trade deals have been fluctuating in the recent past. That has been creating some kind of a pressure on the Asian markets in the medium to short term. Definitely, that can have some kind of a impact on Indian markets also. If we can, if we can get a trade deal, that's
Hmm.
fine. Look at the other nations. Despite of the trade deals, okay, the still this volatility is still going on. That's going to create some kind of volatility in the coming weeks and coming months on the markets. So we need to ready to absorb and ready to embrace those volatile movements in the coming days.
Hmm.
That's where it's going to come. And also, the we have India has been the net buyer of Russian oil, and that's an open, deliberate news, and everybody knows that. And India has taken
Yeah.
some kind of a benefit, but that's this India importing oil from Russia also good for the global oil prices, because if we buy from other nation, the global oil demand will go up and the prices can shoot up. So to
Hmm.
just to moderate for the betterment of the uh, uh, global oil prices, also to stabilize the global oil prices, energy prices, we have been buying. So these kind of decisions can create some kind of a knee-jerk reaction in the medium to short term. The policy making decisions are going to create some kind of a risk at this point of time for the markets. So by and large, the risks are accentuating from outside, not from the internal originating from India.
All right. We've talked about the risks. Let's also talk about some positive triggers. What triggers do you think could turn out to be positive for the markets right now in the current scenario, whether domestic or international?
One thing is, if the trade negotiations progresses at a positive manner, and if we can conclude a win and win a trade deal, that can be a positive for the market, and also it gives a lot of confidence and comfort to the global investors. Right now, the scenario is, if you are a fund manager sitting in US, if you want to invest in
Mm,
India, until unless you have the core roots of the complete demographics and the complete core about the market and Indian companies, then you will get the comfort. Otherwise, if you are a hedge fund manager, or you want to diversify in MSCI index, the
mm,
sentiment dragger is in between the escalations and trade negotiations between India and US. These kind of things that create some kind of a discomfort to the majority of the investors, the FPIs in US. So if we can get a good trade deal, okay,
mm.
that can increase the confidence of the global investors towards investing in India. Everybody say India is a great story, but these kind of a knee-jerk reactions and blips in the short term can create some kind of a overhang for the global investors to invest in India. And
Okay.
the medium to short term are the GST rationalization and reforms. They are going to create a good demand, and that's going to reflect in the next coming quarters. And the inflation is cooled off. If we can get a rate cut from Reserve Bank of India in the next coming monetary policies, okay, that can create some kind of a extra demand. And on a medium to longer term perspective, we are ahead of we are we have a budget, the union budget, that
Mm.
can create more reform oriented news that can create some kind of a sentiment booster going ahead. So these are the
Absolutely,
positive
yeah.
news that are installed in the coming quarters.
All right. Speaking of positive, which sectors do you think could do well in the coming week or near term, per se, 3 to 4 months, and why? And which sectors do you think one can avoid for now?
The positive sectors seems to be, first and foremost, is the banking and financial services. We have seen heightened activity, and the last rally of 1,000 points on Nifty is by and large led by the banking and financial services stocks. So
Hmm.
banking and financial services stocks can be a positive sector, and stocks the investors can look for medium to longer term. And also the
Okay.
defense. Okay, this is a sector which is buzzing every day. The government is focused with respect to the defense budgets are concerned. So the defense sector looks very attractive to me. Any dip in defense stocks is definitely warranted by for the investors for a medium to longer term perspective. The sector to
Okay.
avoid at the medium to short term can be, until unless investor is a contrarian investor and a long-term investor, one can look for IT. But in medium to short term, one can avoid IT, and also the oil and gas, the oil marketing companies, one can avoid in the medium to short term. So
Hmm.
by and large, we are quite optimistic and positive with respect to banking and financial services. But IT, short term definitely avoid, but long term is a buy.
All right. So let's also talk about earnings. How are you viewing earnings expectations right now? What's your view on what's happening in the markets? And do you think that like, what are the expectations in terms of the few top companies, few key names that you think could actually flip the game?
In terms of the earnings are concerned, as per the CRISIL report, the top 600 companies of Nifty, they're going to
Hmm.
post in the second quarter. There would be an expansion of revenues, but there can be a margin squeeze in the medium to short term. Okay, so the second quarter results, what we are witnessing, has been we have not witnessed any positive surprises at a greater extent. At the same point of time, we don't have any negative surprises. By and large, this quarter earnings have been cool. Okay, but the anticipation is by and large in the next coming quarters. But first half, if you see, it has been a moderate quarter. We don't have any negative surprises because we need to also understand the trade tariff wars that are going on, the geopolitical uncertainty, what we witnessed in the first 6 months, that has had a clear impact on the earnings of the companies in the medium to short term. So we got some support from the government in terms of the rationalization of GST. That's going to have some
Hmm.
kind of a positive impact in the next coming quarters. So at the present, the first half of the year, the results has been cool, but next couple of quarters we can anticipate some kind of a earnings growth, which is going to manifest in the end of the financial year. So by and large, the results have been, I don't say it's subdued, but the result season has been going at a smoother note and a positive way.
Okay. All right. Let's also talk about the sentiment in the markets. Do you think investors are currently leaning too bullish, too bearish, or somewhere in between? And what are the indicators that lead you to that view?
So by and large, we had a summer season, and last few days the sentiment has been quite positive. We are at 26,000 level, and market has
Hmm.
been consolidating at this point of time. So by and large, the sentiment is positive to neutral. The sentiment booster can be any kind of a trade deal kind of a thing. That can be the sentiment booster at the medium to short term. But what overcoming the sentiment and medium term optimism is the liquidity. There is a strong liquidity from the DIS are concerned that has been driving the market and supporting the market.
Okay. Let's also talk about valuations. That is a golden questions. Everyone is just always, whenever the market is somewhere in between, not able to gauge. So everybody is like, is it cheap? Is it expensive? Is it fairly valued? That's a golden question in the markets for everyone, even if we talk about outsiders or insiders. So how do you think where the market is standing right now? Is it fairly valued? Is it expensive, cheap? Given the backdrop of the Indian markets? And how do we track the markets right now? What's your view on this?
Neha, with respect to the emerging markets are concerned, for a outside perspective, for a foreign portfolio investors are concerned, they're quite bullish with respect to the prospects of India is concerned. India is one of the key market to watch for, but medium
Hmm.
to short term, there is some kind of a narrative change. This narrative has been keep on changing. Uh, I never witnessed in the recent past. The changing narrative very fast. So there was
Hmm.
a few days back, few months back, buy India, sell China, and sell China, buy India, and sell India and buy emerging markets. So
Yeah.
this a change of the mood of the market is very quickest in the recent past. So the narrative keep on changes. Okay, that's what the scenario at this point of time. And coming to your point with respect to the valuations are concerned, on a
Hmm.
longer term perspective, Indian market looks uh, uh, attractive to me, attractive to for
Okay.
the investors. But there are blips in terms of the short term volatility. that
Hmm.
has been creating at this point of time. So by and
Hmm.
large, Indian market has to be, if you have to sum up the Indian market in terms of the valuations,
Yeah.
last 18 months has been definitely it's a buy and dip, sell and rally kind of a market. So whenever this 26,000 level comes, market is not able to take the leg up. Okay, the follow on buying is not coming. Yesterday also, look at the market; it was above 26,000 level, but end of the
Hmm.
closing day we closed below 26,000 level. So
Yeah.
the follow on buying is not coming because of the short term uncertainty, and also the
Hmm.
earning comfort that's not coming for the market. If we can get a strong earning booster, okay, that can sustain the market at the higher range. So uh, we can't clap with one single hand, but the market could able to stand at 26,000 despite of support, not receiving any support from the foreign portfolio investors. So to have the follow-on buying in the market, we need to have the fund flows from the foreign portfolio investors. That's the missing action in this market.
All right. Let's talk about strategy for the next week. What is your strategy for the investors for the next week? What should they do at this point in time and why?
Better to stay on cash at this point of time. Markets are in an uncharted territory at this point of time. Um,
Hmm.
and by and large, it's going to be a stock specific action is going to take the position at this point of time. And I would look for the level of Nifty sustaining about 25,500 level. This is
Hmm.
the level I'll be looking forward. So this is a crucial support for the Nifty at the medium to short term for the week. If Nifty
Okay.
could able to sustain this level, the positive trend for the market in the medium to short term can be positive.
All right. And what
So
are the
I
two?
would be looking forward market about 26,000 at a higher note, and the below 25,500. This is the level I'm going to look forward.
All right. And any support and resistance levels for Nifty and Sensex both for next week?
For the with respect to the 1 week is concerned,
Hmm.
25,500 can act as a strong support zone, and
Okay.
26,050 can act as a resistance level for the market. If market could able to sustain 26,050, we can see some kind of a uptrend in the market to sustain.
Okay. One last question related to Nifty. A lot of big IPOs, to be very precise, five mega IPOs worth 35,000 crore rupees are ready to hit the markets. And Nifty is also trading near record high. Do you think this IPO system is also going to propel Nifty higher?
With respect to the IPO primary market is concerned, Neha, uh, the successful listing of LG has given a lot of confidence for the market, the primary market. That in the recent past, LG IPO success can be the cornerstone for the primary market. Primary
Hmm.
markets are concerned. So, as and when any IPO comes, okay, that can take over the money from the secondary market by and large. So,
Yeah.
by and large, uh, uh, Nifty trend can be a positive trigger for the uh, primary market,
Hmm.
but by and large, both are interdependent with respect to the market process are concerned.
Right, right. Absolutely. So we have reached the end of our segment for today. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets live stream only on ET Market Wrap.
Thank you, Neha. Always my pleasure to share my views with you and with all the viewers of ET Markets. Thank you.
Thank you so much. Thank you, everyone, for joining us today.